Stock market analysis and projections on the S&P 500. Important information right now. Make sure that you read this slide. It gives you an idea of our style of analysis and what you should think about when you try to apply what we share with you, especially the concept of trade ownership. You really have to make the trade your own. Stock market analysis. The S&P 500 is what we're going to be looking at, multiple time frame analysis, plus we'll look at our market condition monitor, and the market is still strong, and the question is, what would change that? Let's take a look as we look at the S&P 500. This is SPY. On the left, you're looking at the weekly chart. On the right, we're looking at the daily chart. If you are brand new to our work, we are cycle analysts. We look at the rhythms in the market, the energies of the market, just like waves in the ocean, just like there are cycle patterns everywhere in nature. We apply them to the stock market analysis, and they are just phenomenal. Let's take a look as we switch over to this weekly chart, and I'll blow this up for you to see. And you can see in here, as I look back, these cycle patterns, and each of these troughs in here is where the bottoms line up. You could see that right there. When we have two cycles coming down, that is often a time frame where you're going to get a corrective period, like right in here and right in here and right in here. You can see that just lining up absolutely perfectly. And yes, we're coming into one of those right over here. We call those the periods of risk. That's where these alignments come in, and it doesn't mean anything other than the natural ebb and flow of the market is about to bring you a outward flow of funds is what it means, and we're getting into one of those periods right now. Now, the trough that we're pointing right over here, which is somewhere around end of April, beginning of May, that is the ideal trough. In other words, it's right in the middle. Normally, the lows come somewhere a couple bars to the left or a couple bars to the right. Occasionally, they nail it like they did back over here in October. Almost every single time you get these corrections, in fact, I'm going to say every time in the last decade or so, you've taken out that 13-week moving average that's right over there, and very often, as you can see, you get to the 34-week moving average, which is right over there. So we're looking for a decline, which we thought would come. Originally, we thought it would become March or April, but a little bit of shifting in the time frames pushed it out to May, as you can see right over here. So we have late March through May as the period of risk, the time when we expect a peak to come in here and then a decline. When we say period of risk is late March to May, that is the date range that we would expect the trough or the bottom to form. It's also the period where you would expect to get some declines. Now, they're normally at least 4 weeks long, even in these very bullish cycles. You could see here the slim ribbon, the reversal scout right there when it turned up. That gives you the signal that the bottom is in place. When it turned down, it gave you the signal that the peak is in place. And you can see in here, it's been positive this whole way up. It's been telling you of the strength, and it is still positive. So when we say, and I said in the beginning of the show, all the momentum conditions were still positive, we're looking at the weekly, the daily, even some intraday, and it tells us that things are just still immensely strong. That has not changed. As you see, we're trading up near the high. My high projection for this entire year when I did my year-end show was around 510 and or 5100 on the S&P, and I thought that would be an extreme and hard to get to. Of course, the move into technology, AI, changed that as the market got very strong, so we had to raise our upside target. Now, you could see a very key monthly 100% fib extension. That is right here. We came up and tagged that right at that level. And this is a pretty key area, and it might be hard for the market to continue moving up until there is this corrective period. But then after this is over in May, then you get into this period over here, end of May, June, July, maybe even August, where the markets are likely to be rising again. So we'll look for a correction and then another upward move to new highs. That's what it really looks like. This is the 23.6% right over there. Sorry about that. Let me just grab this and move it where it belongs. It won't go. So That's because I have to grab it like this and we'll slide it up there. So that's the 23.6%. That would be a 5.3% correction. That would be very, very modest based on what most of these corrections look like. If it got down to the monthly 23, that would be 7.6%. So the targets on the downside are about 499 and then 486, and then down over here around 480. That's what we expect to happen in these next 4 to 6 weeks, coming out into sometime early May, potentially, and that would be this very minor correction of this very positive upward bull market trend that you see right in here. This is your whole bull market right there. And you have, so you can see, you can have three cycles in there, and the third one is about to have its correction. You want to learn about cycle analysis, of course. Go to askSlim.com, go to the workshops tab, click on that, and there's a free video there, and it tells you all about what our workshop is, and I think you'll find it very interesting to watch that. So corrective process is soon to come, the way that we see this, and a peaking should be coming, well, quite soon. When I look at the daily chart, you can see in here something similar. I'm just going to look at this whole period right in here. This is phenomenal. In fact, is quite unusual to have 1, 2, 3, 4, and be in the 5th rising cycle. And you can see it very clearly calls the upward trend. You can see the slim ribbon, which is our momentum indicator right on here, and that's a free indicator. Which you can get on Thinkorswim. It's also on Wealth 365 charts. It's on TradingView. So you can get that a slim ribbon free. If you're using it on Thinkorswim, you have to download it from our site to get that. So on the bottom here is a slim ribbon PO, and every time it gives you these green arrows in here, it warns you that there's going to be a resumption of momentum in that direction. Phenomenal just how every one of those was perfect in here. So you have this cycle right over here still rising. Let's take a closer look right there. And what's important to see is, remember, we're talking about that period in late April or early May, where there is likely to be that decline of somewhere between, let's say, 5.5% and 8%. When I highlight this cycle right over here, that's going to tell me the date right here, and that date for that trough. Come on, why don't you tell me that? It doesn't want to do that right now. Let me just get rid of that arrow, and I want to really get you that number. And that should do it. There we are. So that ends on even later in May, May 24th. So sometime in May is when this really looks like this trough is going to come in SPY. That would be this cycle right over here, completing, and then the next cycle coming, and then probably moving down sharply. You can see this cycle aligns with the intermediate correction. And you must see a negative cycle configuration and negative momentum for the correction to be in force. What that would mean right now is that 508.12 would need to be broken. If it broke this 78.6% level right there at 511, that would be a warning to us if it got down that far. So right now it's 523. So you can see it's got a ways to go even before it starts warning, and then under 508 would be negative. This cycle right over here could stay positive right here, and the next one is the one that breaks down and takes it down. So if you look at the length of those cycles, each of them is 25 days, 25 trading days. So that whole decline could be contained in that next one right out over there. So we're looking at a potential peaking. Here is that monthly resistance that we talked about right over here around 524, 525. There's also a 100% fib extension from the other cycle. This is the 100% from the monthly, the 61.8 from the daily, and this is the 78.6 right over there. So these resistances right over here are 524 to about 530 with an outside chance at 537 when you look at that. We're going to look for this cycles in here to create the peak. We have no sign of that yet. every single momentum indicator is strong. There is only the slightest of weakening going on in the NASDAQ, and I'm going to show you that looking at the MCM in a moment. So when I go back here to the weekly cycle, you can see the side-by-side and the daily cycle, and now the weekly cycle is dominant. So once we get a sign that this is turning down, it will mean that the weekly is pushing down because there's a dominance over here. It'll be very, very clear when we start to get those breakdowns. Again, the warning at 511, the breakdown at 508.12 right over here. That's when we really get the signal that the market has broken down. In the meantime, strong momentum on the weekly, strong momentum on the daily, bullish configurations going on in the daily. All of that is positive. You've got to be looking towards the upside until the market tells you anything different. That is a look at SPY. Let's take a look here as we switch over to our market conditions monitor. Now this is a fantastic application which is available to level 3 and level 4 members. The difference being level 4 members get intraday information down to the 3-minute where level 3 does not. What I want to look at in here is the S&P 500, the NASDAQ, the QQQ, and the Dow, as you see right over there as they show up. And you'll see here on the short term, so I can go to short term, intermediate, near term, which is kind of an intraday swing trader, and intraday is more of a scalper mode. So here on the short term, you can see the QQQ has turned neutral. And I said in the beginning of the show, there's a rotation that's beginning. And you could see that there is the very, very beginning of the QQQ, or the NASDAQ, weakening, while the other ones are still very bullish, very bullish, very bullish here on the short term. On the intermediate term, which takes in the weeklies and monthlies, which is for investor-minded people, you can see it's still very bullish all the way across the board. Let's go back to the short term right over here and take a look at at this very bullish condition except for QQQ. And now let's take a look at what some of the top stocks are. So I'm just going to scroll this up so we can get a little bit more in here. Trade conditions. Here is the very bullish trade conditions right over here. And let's just look at the top 7 right there. As you can see, all of these very bullish. I can scroll down and you'll be able to tell some more of them that are very bullish moving down. You can see all of those very bullish conditions. This is such a great application. It really gives you a great idea. Remember, we're looking at the short-term conditions right over here. Let's take a look at the very bearish conditions right here by just snapping on that. And you can see Adobe, one of those techs, giving bearish conditions. IYT, IGV, Nike, Baba, and corn. Now, corn is improving. I'm surprised it's showing up right over there. And actually, you can see these are very bearish, but this is only bearish. Corn market has been improving, even though it's showing on bearish. So I think it's going to be giving you some better readings in there. So you can see bearish ones right there. And great information when you look at that. You want to look at the intermediate term, the right there. Here's your very bearish top 5 right over there. And yes, Tesla is one of those stocks that is very bearish on the immediate term. That's people who are investors, and we know it is turning very weak right there. What are the top 5 very bullish ones that we look at? And there you are. XLP, EWA, Australia, right? ARC, wow, that's crazy. XLC, the communication stocks, and EWW is Mexico. So there's what it looks like as very bearish. Please do become a level 3 or 4 member to get this application. It is absolutely fantastic, a great help as you, especially when you look at different periods of time in here based on the type of trading that you want to be doing. Or you can go here to the time frames mode right over there and just see the individual time frames on our Reversal Scout and the Slim Ribbon when you look at that. Or you can type in a symbol right over here, like let's just go to Apple, and it will bring it up for you right like that. So fantastic application right over there, and that gives you an idea of the condition of the stock market. As we said, the NASDAQ weakening, the rest of the market super strong. This is an overall intermediate to longer term, very positive condition that we see going on here. Just looking for this corrective period to go on out sometime into May, and then the market to be moving up again to more highs, to what are already extreme valuations, and probably getting to more extreme valuations before any kind of real bear market sets in. That is a look at the SPY and a look at the stock market today and our amazing MCM. Please do go become a level 2, 3, or 4 member to get all of our analysis on all of the indexes, and watch the Future Speak show on Wednesdays when Arby goes over all of those futures. This is something you have to see if you are an active trader. Announcing the askSlim Day Trader Service 2.0. Launch date 3/11/24. And this is the most amazing collection of custom tools that I have ever seen for active traders. Amazing resources. In 50 years trading, I have never seen anything like this. Our team has been building this for 6 months, and you're going to see something that is incredible. On the left, you can see the impulse monitor. What this tells you, looking here, and this is set up for 4 of the indexes that everybody trades, what the conditions are of the market. So it's green, yellow, or red, and in this case you're seeing all green, so the market is in strong conditions. That means that there is upside energy in the market, and it is likely to continue to the upside because of the inertia that's in the market, the energy that's in the market, and notifications that you can see based on when these things change. This one in the middle is my favorite strategy. It's the 8-minute strategy, and what you get here is our strategy conditions right here. So you can see when they're green, you have a strategy condition that is likely trade on, and when it's yellow, there's no trade, and when it's red, it's trade on the downside. And these are the different aspects, the inputs in that strategy. And when they're all in alignment, then these signals go on, and it really tells you when it's trade on in the 8-minute strategy. Also, add to that Matt's intraday price zone roadmap. This is support resistances, and it gives you a great sense of bias in the individual indexes. So it's S&P 500, NASDAQ, and the Russell, and you have our support and resistance zones, and the yellows areas are the acceleration zones, and that tells you where it's likely to keep accelerating through that area or to find support or resistance. As you could see, support being found right over here on the down day. And in the yellow zones, when it gets in there, it's pretty likely it's going to move all the way through it. So you can see, and when things are changing, then you get our reversal scout in there. And there are 2 versions of it, the swing and the scalp reversal scout. And this is just so amazing, as it will be a great guide to you, all of these tools, as to which are the strongest and which of the weakest indexes, and which ones you want to choose to be on the long side or short side, or both if you're a pair trader. Amazing tools that you see right over here. Let's look at the next screen, and you will see that what we have here is my turbo indicator. So what happens is that, let's say it's going up and it's green and telling you that, in this case, the QQQ is in an a period of upward energy. When the turbo goes on, energy is accelerating, and that really helps you expand your trade, improve your trade in both time and price, so you can stay in the trade longer. And of course, that's the key, maximizing winning trades. Also, we've added all of these symbols in here for those that are day traders, scalpers in the individual stocks or important ETFs, and you can see how it shows up here, where it shows you whether or not it's positive or negative, or whether the turbo is on, and what the trade condition is based on that, based on my 8-minute strategy. Just amazing. And then a change log that shows you when everything is changing. Add to that, this is just beyond belief, we're recording the entire day. In other words, you can go back and look at these strategies. You can go back and review what happened during the whole day, and then you can see, as we've recorded everything, how you could have improved your approach to the market on that day. You can go back and review many days because we'll be recording every single day. And this takes a shot of it every 5 minutes. And you can just move forward through the day and look at how these indicators are changing and how the trade strategy was changing and how it's trading around each of the support and resistances, and reconstruct the day and really learn so much of how you could have approached the day. And our new cockpit is something like you've never seen. If you're a day trader, look at this. Day Trader Cockpit, it has all of that information on one page. We're going to be zooming this to you. Yes, it's live all day long, and you'll get our full suite of trading indicators and planning tools for your active trading, day trading. You'll get the impulse monitor. You'll get the 8-minute trade condition. You'll see the charts that make up that 8-minute condition. It's just so informative in there. And right over here on the top, you can see that is our trade signal line in there, and that is so important. And then again, you get Matt's key chart grid there on the three indexes that you see there, and really gives you a fantastic idea, putting all of this together as to what the conditions are of each of these indexes or the important key stocks that we have built in here all day, every day. There's no way that you can know more about the markets if you're a day trader than having the Day Trader Cockpit. All of this, can you imagine? We're running a special right now, so lock in the introductory rate. First month 30% off, only $24.50. What that means is that, well, you can cancel it at any time, but it only upgrades at $34.95 a month, and you're going to lock in that introductory rate. And then the prices are going to go up, but not to you, because you're going to get these fantastic low prices. You want to learn more? Go to askSlim.com, go to the top of the front page, click that Learn More button, or write to Matt at askSlim.com for more information. He'll be able to answer any questions you have. This is the askSlim Day Trader Service 2.0. Nothing like this anywhere else. It's going to really raise your probability of success as an active trader in the market. Please do go to askSlim right now and subscribe. For those of you that want to learn more, Matt is doing a webinar on Thursday, March 28th. He's going to take a comprehensive look at the Day Trader Service. That is on March 28th at 3 p.m. Central Time, 5 p.m. Eastern Time. And if you miss it, just write to Matt at askSlim.com, and he'll be able to send you a replay, and you're going to love what you see.